What backs Bitcoin? Bitcoin is a type of digital currency, created and held electronically. Bitcoin's decentralized currency system was established in 2009 by an unidentified programmer or group of programmers using the name Satoshi Nakamoto. So what backs Bitcoin? No government or traditional banking authority. Instead, Bitcoin relies on complex computer code to both process transactions and generate more units of digital currency. What is Bitcoin? Bitcoin is a decentralized digital currency with no central monetary authority or government. This means that Bitcoin is neither issued nor backed by any single country or organization. Instead, the money supply in Bitcoin is formed as a result of a computer process known as mining. Mining involves running applications that solve difficult math problems to earn bitcoins and also involves gathering transaction fees, and new bitcoins are introduced into the system every 10 minutes. Although Bitcoin has its roots in libertarian philosophy and is currently associated with illegal activities like drug dealing, money laundering, and tax evasion, it has been hailed as revolutionary by supporters because of its potential to shift how transactions take place. Bitcoin's underlying technology, the blockchain, holds the promise of being able to transform financial services. The blockchain is a public ledger shared among users who use their computers to validate transactions. What is backing Bitcoin? Bitcoin is not supported by any physical asset in any way. This should be obvious given that Bitcoin is not managed by any central authority, be it a person or an institution. As a result, nobody is in a position to make this commitment, and even if they were, they wouldn't benefit in any way from taking on the enormous liability associated with guaranteeing the funding. Bitcoin's value is not necessarily affected by the fact that it is not backed by anything. The majority of the currencies that are utilized in the economy of the world do not have any form of backing behind them. Every major economy in the world uses fiat currencies to conduct day-to-day transactions since, by definition, a fiat currency is a currency that does not have any support behind it. However, the stability of a currency that is issued by the government typically comes from the central bank's ability to manage the quantity of money that is issued, in addition to the faith that the people of the country and the citizens of other countries have in the stability of the government. When this faith is weakened, a fiat currency can swiftly decline as residents and other nations want to sell their money for more reliable assets. This is because a fiat currency is not backed by anything tangible. We need to look at assets that are not issued by a centralized body so that we can make a more accurate comparison to Bitcoin. Precious metals that get their worth from scarcity rather than building and engineering usage are comparable to Bitcoin in this regard. Bitcoin was created as a decentralized digital currency. You cannot trade 1 ounce of gold for another valuable asset because that amount does not qualify. Instead, the value of gold comes from the gold's inherent worth as a commodity. Because the market has proven that gold will continue to have value for thousands upon thousands of years, most people do not worry about the value of their gold deteriorating over time. In a similar vein, the value of Bitcoin is derived from the demand for Bitcoin, and this value does not require any backing to be maintained. The US dollar has no backing of any kind and is still used as a currency despite being backed by nothing as well. All of this means that no company or organization needs to manage Bitcoin to keep it useful and valuable. Why does Bitcoin have value? The current value of Bitcoin is a result of its potential to challenge the way modern currency is created and managed. The worth of a unit of Bitcoin is based on its ability to appeal to people who want to use it as a currency instead of a collector's item. As Bitcoin becomes more widely accepted as a payment, its value will continue to grow. In the past, currency was based on precious metals such as gold, silver, and other valuables. These currencies had intrinsic value since the asset that backed them could be utilized in several ways. For example, an ounce of gold is still an ounce of gold. This means that whoever owns it can utilize it for jewelry making or to sell it to someone who is looking for a safe and reliable way to store their wealth. The digital currency known as Bitcoin does not have the support of governing bodies, nor does it have a network of institutions that act as middlemen to facilitate its use. In the Bitcoin network, the approval of consensus-based transactions is the responsibility of a decentralized network made up of independent nodes. If a transaction goes wrong, there is no fiat authority, such as a government or another monetary authority, that may serve as a counterparty to risk and make lenders whole, so to speak. This is because there is no government or other monetary authority. However, cryptocurrency does exhibit some characteristics that are typical of fiat money systems. It is difficult to obtain, and it cannot be imitated in any way. Executing a transaction that is known as a double spend is the only way that someone would be able to produce a fake Bitcoin for use in illegal transactions. When a user spends or transfers the very same Bitcoin in two or more different settings, thereby producing a duplicate record, this is referred to as a double spending issue. Why is Bitcoin trading volatile? Bitcoin has attracted the attention of traders and investors because of its volatility. In 2017, Bitcoin's price rose more than 1,400%. This was a result of the fact that there was no true oversight of the cryptocurrency, and its technology was not yet fully adopted by the mainstream. Before 2013, Bitcoin's value remained stable for many years. However, in April 2013, it was the victim of a flash crash, whereby the price of Bitcoin fell from around $266 to $50 in less than 10 minutes. Flash crashes are relatively common in the cryptocurrency market and can occur when an investor reacts negatively to new information or changes in prices. The price returned to its original level within a few hours after the flash crash occurred. Why are currencies backed? Almost all modern currencies are fiat, which means they have no inherent value. They are not backed by a commodity, and they are not required by law to be backed by a commodity. The US dollar is one example of a fiat currency. The backing that currencies receive helps to ensure that their value is preserved. Currency is an essential instrument for the operation of a government, but historically, many countries have struggled with unstable currency. This makes it impossible for regular people to make efficient use of the currency, which in turn hinders economic expansion. It is theoretically possible for a government to continue printing its money indefinitely. Nevertheless, the less scarce the currency becomes as more of it is printed, the more severe the effects of inflation become. If a currency is backed by an asset, it may be shielded against inflation. Nonetheless, the government will need to continue to accumulate more of the supporting asset to keep its backing credible. A government may choose to back its currency with another asset to persuade its population that it will continue to maintain its value and therefore tackle the problem of unstable currencies. However, the citizens' trust in the promise of financial support is essential to the success of this technique. If holders of the currency begin to have doubts that the government possesses enough of the backing asset to ensure the promised exchange rate, then the value of the currency may rapidly decline as individuals attempt to exchange their currency for the limited amount of the underlying asset. If this occurs, the value of the currency will be negatively affected. Bitcoin versus fiat, a comparison. In the case of Bitcoin, it is not backed by any asset. There is no central authority that can make crypto holders whole if they lose their wallets, as there currently is no entity with an interest in doing so. Instead, Bitcoins are created via a process called mining. In this process, new Bitcoins are generated through the verification of transactions on the network. Miners compete to mine new blocks that contain records of transactions in a blockchain and get rewarded for doing so. This process is called mining because it will become more difficult as the number of Bitcoins grows. There are currently fewer than 21 million Bitcoins in existence, and when larger blocks are mined, this supply will continue to get smaller until a set maximum number of coins has been reached. Bitcoin has no central authority that can issue new currency or guarantee transactions. Instead, transactions are verified by consensus-based nodes known as miners. The miners must follow the rules that govern the Bitcoin network and accept only valid transactions, which are verified by other miners. Is Bitcoin backed by mathematics? Bitcoin, much like the United States dollar, is not backed by any kind of tangible asset. Rather, it obtains its value from a variety of other sources. Many individuals hold the erroneous belief that Bitcoin lacks any value since there is no central authority that regulates its price and it is not backed by any physical commodity. This belief stems from the fact that Bitcoin does not have a centralized institution that enforces its worth. However, the current device value of Bitcoin is somewhere around $30,000, and the total market cap of Bitcoin is over $625 billion. Market capitalization is defined as the unit value multiplied by the amount of Bitcoin that is currently in circulation. This demonstrates that a large number of people consider Bitcoin to be valuable. Bitcoin, on the other hand, is not backed by anything tangible, rather, it is supported solely by the complex mathematics that underpins its blockchain technology and its limited quantity. This ensures that Bitcoin will always have a restricted quantity and will be resistant to censorship, both of which contribute to the cryptocurrency's value. In a panel discussion that was broadcast on CNBC, Anthony Pompliano made the following observation: "If you don't believe in Bitcoin, you're stating that you don't believe in encryption." According to Pompliano, the use of blockchain technology gives Bitcoin an inherent worth, making it almost comparable to the gold standard when it comes to cryptocurrencies. Bitcoin was the first successful money system to operate without a centralized entity pulling the strings. This means that its supply cannot be artificially inflated, it cannot be easily seized like gold was in the 1930s, and it provides a level of financial freedom that very few, if any, fiat money can match. The rest of Bitcoin's value can be attributed to the fact that it was the first effective monetary system to function without a centralized entity controlling it. Additionally, it has been demonstrated that Bitcoin possesses utility value, as thousands of retailers are now accepting it as payment for goods and services. Bitcoin has been given the status of legal cash in two nations, El Salvador and the Central African Republic. As a result, businesses in those countries are required to accept Bitcoin as payment. The extent to which a currency is used in different parts of the world can serve to demonstrate or even maintain the amount of confidence that people have in that currency. The United States dollar is and will continue to be for the foreseeable future, a currency that can be spent practically anywhere. This is true regardless of how well it is performing in comparison to other fiat currencies. As a direct consequence of this, customers have faith in the dollar. The ability to purchase things and being practical are both valuable goods in and of themselves. Bitcoin, on the other hand, has a ways to go before it can be considered a popular currency. The cryptocurrency community has come a long way since the initial Bitcoin transaction was got to spend on a pizza, but until there is widespread adoption of cryptocurrencies like Bitcoin, people's faith in the digital currency will not be as high, nor will it be as widespread as people's faith in established fiat currencies. Bitcoin, although it is backed primarily by consumer confidence, turns out to be very similar to a fiat currency. This is although there are evident contrasts between the two. The more faith people have in the cryptocurrency ecosystem, the more faith they will also have in Bitcoin. Conclusion: Bitcoin is neither digital gold nor a more efficient and effective replacement for fiat currencies. As a result, its value rests on how much people believe it will be valued in the future. Recently, experts have been speculating that Bitcoin's price will continue to increase since the demand for digital currency is still growing. Bitcoin has several characteristics that are similar to precious metals and make it appealing to investors who are looking for alternatives to fiat currencies. This indicates that investors should consider Bitcoin in their portfolio as well as evaluate it from a financial perspective.